Eric Mwathe with Mwathe.com, June 27th, 2016. Let's take a look at markets here with about market open for about 45 minutes, being a Monday. And we can see after the huge drop here on Friday, huge drop worldwide, we see that the market is following through early on Monday here. Now the question is what next after this huge 2 down days. Now if you take a look at some parameters, for example, take a look at the volatility instruments, and here we have the UVXY, you might start seeing that there's a possibility that the market could actually be looking for a reason to bounce, despite what was obviously a huge down day. As you can see, markets trading at the lows of the day, Dow down about 260, 265. If you take a look here at the volatility instruments, the UVXY, one thing you notice that this instrument should be moving higher today, substantially higher, but it's only up about 4%. Also take a look at the fact that if you draw a line connecting RSI highs, you come to this RSI line, which might suggest that around here one can easily see a reversal for this instrument. A reversal for this instrument is definitely going to be signaling a market that wants to bounce. Also take a look at the previous break line on the RSI, and we see that coming off this break here, and while I'm recording this, again we are still seeing markets here move to fresh lows for the day. Just want to put this here, markets moving to fresh lows for the day. We see that here, if we come back and take a look at where the market broke down as far as this instrument is concerned here, and this is when the market was a buy late, or let's call it summer of 2015. We draw a line from here, it should be something like that. You can see that every time we hit that line with uniform activity, rejection there, so rejection here led to a pullback day to day, double top here eventually led to a pullback, resistance with uniform activity here for another pullback. So you combine those, and also here recently we hit that level and we had a multi-day pullback. We are coming back to test that level. So combine that with the previous line, which connects the RSI highs like that. You can see here over the next 1 to 2 to 3 days, one can expect that this market actually comes off the lows and does stage a bounce. Additionally, if you take a look at the VIX or the VIX, the actual instrument here, we can see that if you draw a line connecting where the RSI has been stalling, somewhere around here, this line so happens to be at about 61.8 on the weekly chart. And here every time we have uniform activity rejection on this red line, uniform activity rejection here, we've been getting all the major highs as far as the VIX is concerned. Here was not uniform activity, but here we did touch that with uniform activity for the highs there. And ever since then, every time we hit this level and pull back, the market did bounce. So coming back here and already down for the week, even with a down market, here if we coil back below this red line with uniform activity, one can expect that the VIX is signaling around here it could stall, which suggests that around here the general market could actually bounce. Take a look at the VIX Daily, and here you're gonna see that there's 2 rejections. So let me show that rejection here and again here over the last couple of days, and this is rejection at 69.1 on the daily, which is bearish. Keep in mind that for now we are seeing that the VIX has come back to test, in fact come back to make new highs in price, but the RSI is making a lower high. So that negative divergence could easily set the stage for a pullback in this instrument and for the general markets to move higher. Take a look at the hourly, and I talked about this over the weekend. You can see that we had an improvement in prices, but the RSI did not follow through. Again, we see here negative divergence, suggesting that one should start looking for reasons to go along, maybe even have some probes in the market to start buying instruments that they've been watching, because around here this is signaling that the market could easily recover. Take a look also at the uniform rejection here. So we draw a line here, a recent break right there, which brought the market off these recent highs, and so we draw a line from there, and you can see that right now it looks like we could easily be forming uniform rejection on this red line, suggesting that around here we could stall. Now keep in mind, this line to me appears to be at about 61.8, so we see that number again appearing on the charts. Rejection on this level tends to be significant, so we'll see how things go here. Now the one thing I can state here is, if you take a look at the S&P 500 SPX, we can see that right now the RSI is trading below 30.9. Now it is important to understand something here. Generally speaking, when your RSI is below 30.9, you don't get a reversal. You don't get a reversal when your RSI is below 30.9. What needs to happen is something like this. The market will make an attempt to move higher and fail, and it's going to have to come back, make fresh lows, or at least test the lows and move higher. While this test is taking place, or while this movement here is taking place, then the RSI should show positive support or positive divergence. So in other words, we're going to have a situation where prices either make a test or they make fresh lows, but the RSI improves. So that positive divergence is what you're looking for the trigger to actually be aggressive long. At these current levels, one can do probes. You can start looking for reasons to go long by probing some of the instruments you've been watching. But the best signal is going to come only after the market shows positive divergence on the hourly chart for the S&P 500. Now, to explain this, I'll go back to the recent lows. Let's go back about 6 months. And what I'm talking about is here. You can see here the S&P 500 did trade below 30.9. So that was not the low. And what it did is, it took a couple of weeks or days. It had to come back to test the lows, and it actually broke to fresh intraday lows. But take a look at the improvement on the RSI. So what you're waiting for is this improvement, and so the actual buy point on hindsight, yes, was here when you saw this positive divergence, and the market also gave you confirmation of that because it hit that line twice. It hit here twice with that positive divergence line, and after that is when we see the market eventually stage a nice move to the upside. As you can see, the market would go on to record higher levels. So here I would say the best thing to do is wait for the market to eventually, over the next couple of days or trading hours, let the market go up, come back, maybe make fresh lows, and if it starts coiling back up with uniform activity, with positive divergence on the RSI, so at that particular point you'd like the RSI to show an improvement, and that is when you're going to have the sense or the timing which would suggest that lower lows in price but improving technicals. That's what you want to see. That would be the ideal time to take up a position. Right now, of course, with the market trading below 30.9, it suggests that you can still expect to see lower prices. At some point in the next, let's say 1 to 3 days, we are going to see the possibility of the market showing positive divergence because of the behavior of the VIX. As long as the VIX is struggling to hold the levels we discussed, I think this market eventually snaps back and shows a recovery. Again, the best thing to do is wait for positive divergence on the hourly. That would be when you have confirmation of market showing strength in the face of fresh lows, and that's when you'd want to go long. So in other words, the best thing to do is be patient, wait for the market to eventually show some recovery. It might take a couple of days, make an attempt to fresh lows, start coiling back up, and while it's doing that, you want to see the RSI show improvement, and it is that improvement in the RSI, or at least that positive divergence, that would give you indication to go long the next time the market comes and makes fresh lows. So without seeing positive divergence in the market on the hourly, so without that positive divergence, all you have to do here is be patient, because the market more often than not is gonna test the lows just like it did here. So there was no point of buying the market during this period here, because there was no positive divergence. The positive divergence came after this line was established, and more so after the market showed that double bottom on its same line. So until the market showed this nice double bottom support on the same line, that was positive divergence. That was good indication of intention to go higher at this level. For now, we haven't seen positive divergence. The best thing to do is just sit on your hands until the market at some point shows you that buy signal. Otherwise, right now we can start looking for opportunity, because the VIX itself and other instruments, like we discussed in this video, that are volatility, are not showing that much strength. And as long as they show resistance, as discussed in this video, as long as we are seeing that the possibility of resistance on some of these volatility instruments like the UVXY, as long as they are showing the possibility of coming back and showing resistance on the levels here, as long as there's resistance there, that's not good for this instrument and could eventually turn out to be bullish for the market. And also we drew the line right there. The one thing I failed to point out, and let me point out here, is you can use the recent daily closing high for this instrument at 15.70 as a trigger of whether the market is in trouble or not. Anything above 15.70, which happens to be this recent daily closing high, is bullish for this instrument, bearish for the general market. So as long as this instrument is struggling to hold above 15.78, I give the benefit of the doubt for the market to bounce in the next 1 to 3 days. So above 15.70, this instrument is bound to move higher. Below this number, which is the recent daily closing high, this instrument struggles because of these two lines showing resistance right now. Eric Muaded, muaded.com. As always, I'll keep you guys posted. This is how markets are trading after 1 hour of trading on this day being June 27th, 2016. Peace and blessings. ESC.